the right way to do accrual to cash accounting and why QuickBooks gets it wrong for agencies. If you're a marketing agency owner and your CPA is just running a cash conversion out of QuickBooks, there's a very high chance your tax numbers are wrong. Not a little wrong, but materially wrong. And today I'm going to show you the correct way to convert from accrual to cash, why QuickBooks gets this wrong, and why this matters specifically for agencies. Most marketing agencies should be doing two things: running their books on accrual to actually understand performance, and typically filing taxes on cash to control your tax liability. That's the strategy, but here's the problem. The conversion between those two is where everything breaks down. What accrual versus cash actually means for agencies. Let's simplify this. On accrual accounting, you recognize revenue when you earn it. You recognize expenses when you incur them. Not pay them, incur them. On cash accounting, you recognize revenue when the cash hits the bank, and you recognize expenses when cash leaves the bank. Now, for agencies, this creates timing differences like accounts receivable, revenue earned but not collected, accounts payable, expenses incurred but not paid, prepaids, cash paid but not yet expensed, deferred revenue, cash collected but not yet earned, kind of like deposits and stuff like that. And these are exactly the accounts that need to be adjusted. And there could be more. Here's the part that most people miss. A proper accrual to cash conversion is not a report, it's a reconstruction of your income statement using balance sheet movements. The correct formula looks like this: revenue, cash basis equals accrual basis revenue, and then you look at your increase in your AR or your decrease in AR, your increase in deferred revenue or your decrease in deferred revenue. A lot of accounting terms, but you need to look at the change of certain accounts on your balance sheet. Then you have expenses, cash basis, accrual expenses, increase in AP, decrease in AP, increase in prepaids, decrease in prepaids. More accounting terms that's probably making your head spin because you really want to work on your agency, not become an accountant. So the real conversation is not a toggle, not a report, not a QuickBooks setting. It's a balance sheet driven adjustment process. Why does QuickBooks get this wrong? QuickBooks tries to do this automatically. But here's the issue. QuickBooks only converts accounts that are explicitly linked to AR and AP, meaning accounts receivable and accounts payable, which means it often misses deferred revenue, prepaid expenses, retainers sitting in the liability accounts, manual journal entries, and any non-standard workflows which agencies love to have. But here's the real problem. QuickBooks assume if it's not tied to AR or AP, it doesn't affect the cash conversion. And that's completely wrong. So why is this dangerous for agencies? Marketing agencies are especially exposed here because retainers, deferred revenue, you might collect cash up front, but if QuickBooks doesn't treat that correctly, you could be under or overstating your taxable income. There's timing gaps between AR and AP, high receivables, contractor heavy payables. If those aren't adjusted correctly, your cash profit is meaningless. What a proactive CPA actually does. A real accrual to cash conversion should reconcile every relevant balance sheet account, adjust for non-AR AP timing differences, normalize agency-specific flows, retainers, deposit, tie directly into tax strategy, not just hitting a button in QuickBooks and calling it a day. There's a process that has to be followed. The bottom line, if your CPA is relying on the QuickBooks cash basis report, they are not doing a tax strategy, they are doing software output accounting. And for agencies, that's a problem because the difference between a correct conversion and a QuickBooks conversion can easily be tens of thousands of dollars in overpaid taxes or underpaid tax. If you're running an agency and you don't fully understand how your accrual to cash conversion is being handled, you don't actually know your tax position. That's fixable, but it requires doing this the right way, not the easy way.